We're going to talk about one of the biggest questions people are asking right now. Should I keep renting or should I buy a home in 2026? And I want to start by saying something that may surprise people coming from a mortgage guy. Renting is not always a bad decision. I know that's not the catchy thing to say. The catchy thing to say is renting is throwing money away. You've probably heard that 1,000 times, but that's too simple. Sometimes renting is the smart move. Sometimes buying is the smart move. And sometimes people buy because they're tired of renting, but they haven't really looked at what homeownership is going to cost them after they get the keys. That's where people get in trouble. So today I want to talk and I want to walk through the real cost of renting versus buying in 2026. Not just the rent payment, not just the mortgage payment, but the full picture. Because if you're trying to decide whether to rent or buy, the worst thing you can do is make the decision based on one number. A mortgage payment is not the full cost of owning. A rent payment is not the full cost of waiting. Both choices have trade-offs. The goal is to understand them before you make the move. I'm Dustin Owen, and this is The D.O. Show. They don't teach this shit in school, but they should. I'm Dustin Owen, and for the past 20 years, the mortgage industry has been my classroom. I've helped over 2,000 families become homeowners, built a $1 billion mortgage operation from scratch, and earned my way into the top 1% of income earners worldwide. Along the way, I became a real estate investor, a business owner, and have invested in over 20 tech startups, even hitting a 20x return on one of my investments. This isn't theory, it's experience. Welcome to The D.O. Show, where I teach the lessons life taught me the hard way. Let's start with the part everybody sees first, the monthly payment. In a lot of markets right now, renting looks cheaper than buying. And in many cases, month to month, well, it is cheaper. Home prices are still high in many areas. Mortgage rates are not where they were just a few years ago. Property insurance has gotten more expensive. Taxes can be a real factor. And when you add all of that up, a buyer may look at a house and realize the payment is hundreds of dollars more than what it would cost to rent, sometimes even more than that. So if you're renting right now and saying, why should I buy when it costs more every month? That's definitely a fair question. You should ask that question. You should not let anyone pressure you out of asking it. If renting saves you $500 a month or even $1,000 a month, that money can do a lot if you're using it the right way. You could pay down credit cards, you could build savings, you could improve your credit, you could build a down payment, you could create a stronger emergency fund. So no, renting is not automatically a bad idea. Renting can be a smart step when it is part of the plan. But there's the key phrase, plan. Renting with a plan and renting because you don't want to deal with the decision are two very different things. If you're renting because you're getting your finances in order, that can be smart. If you're renting because you may move in a year, that too, very smart. If you're renting because your job situation is not stable, that's a smart move. But if you're renting year after year, your rent keeps going up, your savings are not growing, your debt is not going down, and you're no closer to buying than you were 3 years ago, that is not a good strategy. That's just you standing still, and that can be expensive. So let's talk about what renting really gives you. Renting gives you flexibility. You can move more easily. You're not responsible for major repairs. You don't have to replace the roof every time that it leaks. You don't have to fix the AC when it breaks. You don't have to wonder why the dishwasher suddenly sounds like it's trying to escape the kitchen. You call the landlord. That part of renting is nice. But renting usually gives less control. Your rent can go up, your lease can end, the property can be sold by the owner, the building can change management. The area can become more expensive, and every time your lease comes up, someone else gets to decide what your housing cost looks like next. That's one of the biggest differences between renting and owning. Renting gives you flexibility, owning gives you more control. But owning also gives you more responsibility. And responsibility, well, it has a price tag. So let's talk about buying. When people think about buying a home, they usually start with the mortgage payment. And quite honestly, that makes sense. But the mortgage payment people see online is usually not the whole number. You might go to a mortgage calculator, put in a home price, throw in a down payment, and see a number that looks doable. Then the real world shows up and ruins the party, as it loves to do. Because the actual monthly cost of owning a home may include principal and interest, but it's also going to include property taxes and homeowners insurance, mortgage insurance, and potentially HOA dues, along with maintenance such as lawn care and pest control. So if your rent is $2,400 and the online calculator says a mortgage payment would be $2,850, you might think buying is only $450 more. But once you add taxes, insurance, mortgage insurance, HOA dues, as well as some of that maintenance, that difference could be much higher, $800 or even $1,000 more. That doesn't mean you shouldn't buy. It means you need to know the real number before you buy. Too many folks compare rent to a half-built mortgage payment, and that's just bad math. And bad math is undefeated at making people stressed. A house should not make you broke. A house should not take every dollar you have. A house should not force you to stop saving, stop living, and start praying that nothing breaks. Because something will always break. And that's not to be negative, that's just homeownership. If you own a home long enough, things will need to be repaired. The AC will act up, the roof will age, the water heater will quit doing what water heaters do. The appliances will stop cooperating. Your home does not care that you just spent money on furniture. It has its own plans. So before you buy, you need to know whether the payment works after you include the real cost. Not the prettiest version of the numbers, the honest version. Now, that being said, homeownership can still be one of the best ways to build long-term wealth in America. When you own a home, part of your payment can go towards paying down your loan. Over time, you will build equity. If that home increases in value, that can increase your net worth. If you have a fixed rate mortgage, your principal and interest payment does not change. Sure, taxes and insurance can change, but the core loan payment itself, that stays locked in, and that's a major difference from renting. A renter may be paying less today, but 5 years from now, that rent may be higher. 10 years from now, it may be much higher. A homeowner who bought responsibly may still have the same principal and interest payment while building equity at the same time. That's where buying can become powerful. Not always right away, not always in the first year, but over time. Real estate usually rewards people who can afford the home comfortably, hold it long enough, and avoid panic decisions every time the market changes. So let's talk about waiting. A lot of people in 2026 are saying, I'm going to wait until rates come down. And I understand that. Mortgage rates have a huge impact on payment. If rates come down, buying power can improve. But there's another side to that. If rates come down, more buyers will jump back into the market. More buyers can mean more competition. More competition can mean fewer seller concessions, higher prices, multiple offers, and way less room to negotiate. So waiting could help you, but waiting could also work against you. Buying right now could be smart. Buying right now could be a mistake. It depends on your market, your finances, your timeline, and the exact home you're trying to buy. This is why national headlines can be so misleading. You'll see one headline saying renting is better, another saying buyers have more negotiating power today than they've ever had. Then a headline that says home prices are flat, while the next headline is talking about how inventory is rising. They can all be true, by the way. Real estate is local. Your city changes the answer. Your neighborhood changes the answer. Your price range actually changes the answer. The condition of the home will change the answer. A starter home in a high-demand suburb is not the same as a luxury home sitting on the market for months. A buyer in Orlando is not looking at the same situation as a buyer in Chicago. A buyer with no debt, strong income, and money saved after closing is not in the same position as a buyer with high debt and no emergency fund. So instead of asking, is 2026 a good year to buy, ask a better question. Is this a good year for me to buy in my market? That's the real question. Now let's build a simple way to think through it. First, ask yourself, how long do you plan to stay? If you think you may move in a year or two, renting's going to make more sense. Buying and selling comes with costs. You have closing costs, moving costs, repairs, time, stress, potential selling costs when you move. If you buy and sell too quickly, you may not give the home enough time to work in your favor financially. But if you plan to stay 5, 7, or 10 years, buying starts to look vastly different. You have time to build equity. You have more time to ride out market changes. You have more time for ownership to work for you. Secondly, you have to ask, are you buying comfortably or are you stretching? Because there's a big difference. Getting approved for a mortgage does not mean you should spend the full amount. A lender can tell you what you qualify for. That doesn't mean every dollar of that approval fits your life. You need to look at your actual budget, your income, your debt, your savings. You need to consider your children, whether they're your current children or your future children. How about your car payments, your business, your lifestyle, your future plans? If the payment only works when everything goes perfectly, that's not a strong position. Life rarely goes perfectly. Third, ask of yourself, how much money or cash will you have left over after closing? This one gets overlooked all the time. People focus so much on the down payment that they forget about reserves. You do not want to buy a home and have $312 left in your account. That's not a strong start. That's a financial jump scare. You need money left over for moving, for repairs, for furniture, for emergencies. Honestly, for everyday normal life. If buying wipes you out completely, you may need a better plan before you move forward. Maybe that means waiting a few months. Maybe it means looking at a lower price point. Maybe it means using a different loan program. Maybe it means asking about seller concessions. Maybe it means improving your credit so the payment works better. The answer is not always don't buy. Sometimes the answer is buy smarter. Fourth question is this: what are you doing with the money you save by renting? This is where people need to be honest with themselves. If renting is cheaper and you're using the difference to pay down debt, build savings, improve your credit, or invest, renting may be helping you get ready. That's a real plan. But if renting is cheaper and the extra money disappears every month, then renting is not really helping you move forward. It's just cheaper in the moment. That's the big difference between waiting with a plan and waiting because the decision feels overwhelming. If you're going to rent, rent with intention. Know what you're trying to accomplish. Set a savings goal. Set a debt payoff goal. Set a credit score goal. Set a date to revisit the buying conversation. Because if you don't put a plan around it, another year can go by fast. Then another. And suddenly, you're 5 years in. Rent is higher, home prices are higher, and you still haven't positioned yourself to buy. Nobody wants that. Now let's talk about the emotional side. People don't buy homes because of numbers. They buy because of stability. Like they want roots. They want their kids in a certain school district. They want a backyard. They want a garage. They want more space. They want a place to make memories. They want to stop asking permission to paint a wall. They want a dog without reading a 14-page pet policy written like a military contract. That part is real. A home is not just an investment. It's where life happens. But emotion cannot be the one doing the math. Loving a house does not make the payment affordable. Being tired of renting does not mean you're ready to buy. Feeling behind because your friends bought homes does not mean you should force it. Your timing is your timing. The goal is not to buy because someone told you renting is bad. The goal is to make a housing decision that fits your life, it fits your numbers, and it fits your future. So let me give you a clean breakdown. Renting may be the better move if you need flexibility, if you may move soon, if your savings are thin, if your debt is too high, if buying would stretch you too far, or if you're using the lower monthly payment to get financially stronger. Buying may be the better move if you plan to stay put. Your income is steady, you have money left over after closing, the payment fits your budget, and you want more stability long term. There's no trophy for renting. There's also no trophy for buying. The win is making the right move at the right time for your situation. Now, if you're renting right now, here's what I do. Pull your current rent payment. Look at what your rent was 3 years ago. Look at what it is now. Then look at what a realistic home payment would be in your market. Not your dream home, not the house with the perfect kitchen and the perfect backyard that makes you start mentally hosting Thanksgiving. I'm talking about the realistic home. Then ask yourself, can I afford this payment comfortably? How much money would I have left over after closing? How long do I plan to live there? What happens if taxes or insurance goes up? What happens if I wait another year? What happens if rates drop and more buyers enter the market? What happens if rent keeps rising? These are the questions that help you make a better decision. There's no pressure, and you should not be afraid. Don't go falling for the random headlines. Look at actual numbers. And if you're thinking about buying, do not start with the house, start with the plan. What payment feels comfortable? What monthly number lets you still save money? What cash do you need left after closing? What neighborhoods make sense? What loan options fit your situation? Are there any down payment assistance programs? If so, are you eligible and would you qualify? Can the seller help you out by giving concessions? Would buying now put you in a better position, or would a 6-month plan make a purchase stronger? That's the conversation you should be having. Not buy now because renting is bad or wait forever because rates are high. Take those things out of the equation. The right answer is usually more personal than that. So here's the bottom line. Renting is not throwing money away if it is helping you prepare. Buying is not automatically a great move if it puts you under pressure every month. The smartest move is the one that gives you the best mix of affordability, stability, flexibility, and long-term upside. For some people in 2026, that move is buying. For others, that move is renting for another year while they build a stronger position. But doing nothing and hoping the decision gets easier is usually not the best plan. So if you're watching this and you're trying to figure out whether renting or buying makes sense for you, especially in 2026, fill out the form using the link in the description. We'll get you connected with a TLOP approved real estate professional who can help you look at your local market, your budget, and your options. Not some national average, not some random calculator, your actual situation. And while you're here, subscribe to the channel. We're going to keep breaking down the real-world conversations around homeownership, financing, real estate, and making better decisions with your money. I'm Dustin Owen, and this is The DO Show. We'll catch you on the next one.